to spend a bit of time looking through trust accounts. I suppose the general issue that we tend to come across is that trust accounts mean very different things to very different people, and they are very different structures depending on what that trust account is looking to cover. And actually, as a quick plug, there are a couple of blog posts we've put on our website which just try to sort of differentiate between when trusts are used and the different sorts of protections and things. Again, those links will be on that landing page. But I just wanted to talk through what we tend to see, certainly when we're talking about ATOL trusts, and particularly just in relation to the consultation. So very broadly, a trust account has 4 kind of key characteristics. One is a segregated bank account. Number 2 is a trustee, an independent person overseeing that bank account. Number 3 is a trust deed, so a very weighty legal document of 60 to 70 pages that explains exactly how the money goes in, when it can come out, and what should be done in the interim, and how people should act, and what the legal status of that money is. And then the beneficiaries, it needs to make very clear what happens in the event of a failure. And so all trust accounts would have usually those four basic aspects, but the aspects would actually change. Certainly the trust deed would look very different if it was, say, an ATOL trust versus a trust to protect your non-flight packages or whatever. So just as a quick canter through the typical workings of an ATOL trust account, and this is a very simplified booking process, I suppose. So if you think of a typical booking, you might have the initial booking date, the balance due date, supplier payment date, which sometimes would be in advance of departure, I guess sometimes after departure, and then a return date. Got a trust account there in orange, and then your own sort of bank account, current account down there in grey. So customer pays a deposit. In this example, it's a £1,000 booking, so a £250 deposit. That goes into trust. The current trust account does allow you to pay the flights immediately, but what you have to do is pay that flight out of your current account. And I should just say, firstly, the 250 going into your account, either that goes directly because you've pointed your merchant ID into the trust account, or sometimes people put it into, say, an interim bank account, and they have a 2-day period to put it into trust. But the money has to go into trust within 2 days of the customer paying. You can pay your airline usually at the point of booking, and then you have to claim that money out of trust. But important to note that there is a slight timing difference, and we'll just talk about that in a moment, because getting money out of the trust account, you have to follow what they call a payment request process. Effectively, you have to make a request to the trustee, and you have to detail why that money is justified in coming out. So there's a slight timing difference there, but typically you pay your flight, then you'd claim it out, you then collect your final balance. And for a simple flight plus hotel type booking, the rest of the money would have to stay in until return. So if you needed to pay another supplier, let's say a hotelier, in advance of departure, then you would have to fund that from your own bank account until the customer had returned, and then you could take the rest of the money out of the trust account. I mean, there's quite a bit to dig into there. Firstly, Jade, any sort of anything I've missed there? You're the expert on this stuff.
I think, as you said, you can take the monies out retrospectively, be reimbursed following payment to the flight provider. It's also important to note that you do actually have to have a form of protection in place to cover that purchase. That's usually, well, typically in the past it would have been a supplier failure insurance policy. What we're seeing generally at the moment is those policies are only really available for 90 days pre-departure. So a lot of businesses with trust accounts are going down the corporate credit card route, which obviously has financial protection from a consumer credit perspective. So it's not just about paying that supplier, it's about paying the supplier and having an insurance in place, or having paid it on a corporate credit card before you can have those monies out.
Yes, really important point. So the premise is that if the supplier were to fail, there should be some secondary means of protection that would mean the trust account could be made whole again. And as you say, there is that chargeback right. Of course, this is exactly what issue has been raised over the last year, which is that airlines haven't been failing, they just haven't been paying the money back. So no form of protection was suitable, but the trust account was still light of funds. I suppose just talking about some of the challenges that businesses find when integrating these trust accounts. And usually when these trust accounts are set up, it's all new bookings after a certain date. So they don't go, it's not a big bang where you chuck all of your money for existing bookings into trust. Usually that does happen occasionally, but they build up slowly over time. but nevertheless, there's clearly working capital impact. And so just highlighting, I guess, 4 key areas that ultimately dictate whether the trust account can or can't work for you. And Adam, I don't know if you want to come in on any of these particularly. The first one's not super clear, but it's where you're working with an agent. Actually, Jay, do you want to just touch on that first point? So if you're the tour operator ATOL holder and it's your trust account, but you're selling through travel agents, there's a bit of a cash flow timing problem there, isn't there?
Yeah, so if you're selling through a travel agent and the travel agent's taken the money on your behalf and has not yet transferred the money over to you, when you're operating a trust account, you are required to fund those monies in trust. So, commercially, your agreement may say, you're not going to get those monies from the travel agent, or you're going to get them net of commission. You are effectively on the hook for putting those monies into trust. So there's a bit of thinking to be had. If you've got significant monies with agents, I mean, typically you wouldn't expect in the past to have needed or been required to put a trust account in place for that, not that sole reason, but that's a significant reason why it wouldn't work for you. Yeah. Now we're looking at needing to do that, and therefore the commercial agreement with the agent would need to be revisited, and you're either going to have to fund those monies or you're going to have to get the agent to pay those monies over.
Yes. Second point there really is just around the terms of settlement with your merchant acquirer. So the trust deed obliges you to put the money in within 2 days of it being collected. But of course, if you are certainly in current times, you have much worse payment terms with your merchant acquirer, and they're not settling for say 5 days, then again you've got a 3-day potential cash flow window that you've got to settle.
Yeah, that's interesting, is it? Because I think T+2 is probably quite competitive right now. T+3 is relatively standard, but actually, as we discussed last time around, stakeholder risk management and appetite in general has diminished over the past 12 months, in particular with merchant acquirers. And one of the mechanisms that they used in order to shore up their position or protect their risk is by delaying that timing of cash. So you could, in theory, if they're not buying into the trust model, you could find yourself having to fund a slightly bigger period than 1 or 2 days potentially.
Yes. Theoretically, of course, you're right, they should be an interplay. The merchant acquirer should see that the trust account effectively is providing robust protection, and therefore you should see it go the other way, and you should see the time periods come down. But of course, we are, as you say, in this crazy period. Actually, we've had a couple of live conversations with people with trust accounts who have been treated disgracefully by their merchant acquirer, actually. And I think there is this real kind of incumbent merchant acquirers desperate to get out of travel. Here's a 10-foot wall because we just don't want your business anymore. And actually what you do see is some positivity of new entrants coming into the market, willing to do it and willing to take security, or willing to view trust accounts as giving them security. So that could be helpful, but I agree, it's not an easy starting position, is it?
No, absolutely not.
Just those 2 others there, and again, just quickly, because we've got to get through escrows, and I'm conscious of rabbiting on too much, but point 3 and point 4 there. Point 3, firstly, I think is just an operational timing difference. In theory, if you have the protection in place that Jade mentioned, and you pay your airlines, no reason why you couldn't take that money out even the same day, actually. But there is a trustee cost consequence, isn't there, if you wanted to do that every day?
Yeah, I think the more times you're requesting it out, it's going to cost you more money.
Yes. But. And then the final point, and I think it's similar to the merchant conversation, is that delay, point 4, really, between when you have to pay your suppliers and ultimately when the customer has returned and you can have your money back. Obviously, tactically, you want that to be short as possible. From a cash flow perspective, that's particularly painful. We have seen in the past some success there, haven't we? We've seen certain suppliers would be willing to, again, take the view that, well, money in trust effectively gives me protection as well. Therefore, I'd be willing to push my payment date back to, say, departure or even post-departure. And that, then you shrink that window and you give yourself a bit more kind of cash flow, or a bit less cash flow time period to cover. But there's still always going to be a gap, I would imagine.
Yeah, there are obviously trust accounts that exist already in the market and have been around for some time. Yeah. And you will have, various suppliers on the city that brings, and therefore they will allow you to pay much later or even after the event, in which case it's very easy and it works for both parties involved. But equally, for new people coming into the trust model or being forced into this model, and therefore their supply chain as well, all of a sudden that becomes a sell for you as a tour operator to get your supply chain buying into the trust workings.
Yes. And just final point, I suppose, very, very quickly, obviously we're talking about a simplified ATOL package here. I think we have seen, and it's particularly acute as an issue in a cruise retail perspective, if you've got an ATOL holder that's dynamically packaging cruise holidays, and cruise lines, as you know, need to be typically paid a long way in advance. We have seen the CAA show some willingness, haven't we, Jade, to allow money to come out, but it's not a guarantee, and it's not a sort of blanket permission. But certain cruise lines, they do seem to be willing to allow you to take the money out in the same way as the flight provider.
Yeah, definitely. I mean, in the past, they have signed them off. More recently, I haven't seen that many, but you know, the same concept applies. You need to have paid the cruise supplier and have an insurance in place, like with the flights.
Yes. Okay,